Okay, so welcome to the last panel, the distinguished expert panel. My name is Andreas Veneras from the University of Toronto. This is a panel that even the panelists, some of them at least complained. The conference is called International Conference on Blockchain and Cryptocurrency. And although I'm a computer scientist by nature, all of my life I've been working in that area. In the last 2-3 years, I'm reading more economic papers than I'm reading computer science papers, monetary policy, economics, fiat money valuation, and so forth. And I want to point out this cryptocurrency that ICBC has, and it was my intention to honor this. And cryptocurrency speaks about the inherent value of money. So one thing that we cannot really ignore that has been happening for the last 10 years with the blockchain is the emergence of new digital currencies. Whether it's Bitcoin, whether this is Ethereum, there's more than 150 very active with volume currencies that they're getting traded. In the last 3-4 years, we saw the emergence of stable coins, and that was an idea of senior Sayers that came out in 2015. More recently, we heard about the JP Morgan coin that they will be issuing. Facebook has an active team, and when there's smoke, there's always fire, and they're speaking about issuing their own currency. At least that's what the rumors say. It was last year the news that Google wants to hire Vitalik to help them issue their own currency. There's speculation about Amazon. IBM, I believe, in the last 4 or 5 months, they did a major announcement of also creating in permissioned blockchain cryptocurrencies. And they're also, every central bank, every major central bank, I don't know if you're familiar, but the Bank of Canada has the project Jasper. It's at phase 4. The first phase of Jasper 1 was about issuing digital Canadian dollar. Phase 2 was to do settlements of transactions. Phase 3 was to do settlements of stocks. The Monetary Authority of Singapore, MAS, has Project Ubin. Ubin 1, 2, and 3 was identical to what Jasper 1, 2, and 3. And as we speak today, the Bank of Canada and the Monetary Authority of Singapore are collaborating on phase 4, Project Jasper/Ubin, which is cross-border settlement between those two projects. And they've used Ethereum, they've used Quorum, they've used IBM Hyperledger, they've used Corda. The Bank of England has done the same thing, same sandbox. The Bank of South Africa has done the same thing. The Bank of Japan have their own sandbox, and so forth. So we see that the banks, the central banks, are themselves working in the area of cryptocurrency, but with a different view to what the anarchist or the traditional blockchain is. So one will ask the question, are we moving towards Frederick Hayek's idea of denationalization of money that he proposed in 1974, the Nobel Award winner, that in 1974 he said that I envision a time that companies will be issuing their own currency, and those currencies will be freely competing with each other, and this will free us from the idea of having currency issued by the central bank. So are we moving towards that direction, or are we moving towards another tulip mania, as Charles Mackay pretty much published more than 150 years ago? I would like to believe that it will be the first case. And these are some of the questions in the context of money, digital money, that we would like to address today with our panelists. First of all, can permissionless blockchains support millions of transactions per second? Can proof of work do this? Can proof of stake, or should proof of stake do this? and or this is a futile expedition, or what kind of technological advances we should have. The second biggest question that we need to answer is, if we use proof of stake, do the money essentially play the game? Like, we're trying to escape with Bitcoin, Ethereum from the big institutions, the Goldman Sachs and the JP Morgans or the central banks. But then if we end up with a proof of stake that essentially the rich guys controlling the cards, then essentially we simply, didn't change too much. Actually, we made things worse. Because those guys that say that Bitcoin is anonymous and drugs and criminal, they forget that the legal bill, the legal tenders we have today is the most anonymous, the fiat money we have is the most anonymous money that exists, right? Bitcoin is not anonymous. The next question that I would like to address is, because the central banks are working mostly these days with permission blockchains, is a permission blockchain a truly blockchain, decentralized blockchain, or simply we're giving way too much control to the central authority? Do we envision private economies, like the Amazon coin versus the Facebook coin versus my coin versus your coin, competing with each other, and under what asset this has to be backed? How do you envision a stable coin? What kind of asset? Because today, stable coins, they have their own issues. So how do you envision a transition towards a stable coin? And finally, should the moral character of blockchain cryptography be regulated or being outlawed? There's a famous paper by an academic cryptographer, whose last name I can never pronounce correctly, but John will do that for our behalf, which is it's called the moral character of cryptography. And there's always this kind of balance that when it comes to security, what the government leads us to believe is that security and privacy are two opposite quantities. If you want security, you can have privacy. If you want to have privacy, you can have security. They're going to kill you, the anarchists and the terrorists, right? Or you're going to have like all those like bad guys with your money. So is this balance true, or simply the cryptography can work towards providing a step towards democracy? I would like to introduce our panelists. Starting with John Milburn. He carries very many hats. So I didn't know one of them is the HanAsset. Now, we have three more panelists, and if you guys were here yesterday, you will not be surprised that the name of the next three panelists is also John Milburn. When we find the time, Grigore Rosu will also offer his opinion. He's, as you saw this morning, from the University of Illinois. Dan Kong from CoinOne here in Korea, and also Raouf Boutaba from the University of Waterloo. Having said that, I would invite one after the other to come and give an opening statement if they want, and we can start the panel. We will address those questions, and then we'll get questions from the audience. John, do you want to?
No, nothing special. I think that we should just jump into your questions and discussion.
Okay. So, Grigore, anything special? Okay, I think John already set the tone. So you guys can. Well.
No, I just want to be able to yell at Andreas.
So the first thing that I would like to ask, it's 2019, it's like 10 years following the introduction of Bitcoin, pretty much. Where do you see all this volatility in the exchanges, up and down, day after day? Actually, and it bothers me a little bit, is like a lot of people are looking the alternative coins, the cryptocurrencies, as a medium of like trading rather than what the real value of those currencies are. It reminds me a little bit the stock market bubble of 2000. Reminds me quite a bit the 2008 the Dow Jones going like a roller coaster up and down. I do think this gives a bad name to the ecosystem. I do think this is manipulated by the institutional banks. They profit out of it and they want to give it a bad name. So what is 10 years down the road, the lesson that we've learned, and where do you think will be the next step of this going through?
I think everything today is really, it's really hard to believe a lot of it, because all of these digital exchanges are operating in an unregulated, unaudited environment. It's very clear that a lot of the transaction volume that is reported is, I'm not supposed to curse today, he said, so, so I can't say bullshit. Oops. So a lot of these transaction volumes are fabricated. They're very much not believable. The actual liquidity when it comes to fiat valuations is often really hard to find. Where can you actually convert these digital currencies into fiat money? It's a very, very small subset of the number of real exchanges out there. So the volatility, you know, it is a speculator's market. These are not real currencies being used for any type of real commerce, in my view, at this point. And so any of them of value as a currency, it's just not set yet. It's clear that it can become that, but it's not that yet today. This is a wildly speculative asset.
And do you think this essentially will give a bad name to the ecosystem, to the layman's eye? Like,
well, of course it gives a bad name to it. And you know, it doesn't help that the environment is full of these, you know, privileged, libertarian, angry young white boys who think they're building a new nation on the blockchain. You know, that coupled with the dark web, the perception of all of this, you know, dirty anonymous underground transactions, you know, most of that is all not true, but it's the perception of it. It all has a bad image, and you know, I think that we, especially as academics, have to just ignore a lot of that. You know, I'm not in this for speculation. I'm in this to find out what are the key things I can get from this technology, where can I apply these key factors. And to me, the key factors in blockchain are really pretty simple. You know, what do I get from a blockchain? There are two things I get from it. I get transparency and I get immutability from a decentralized public blockchain. And where those are helpful factors, I can apply it and make some new kind of product that wasn't possible before. And so that's my personal focus. I want to build things that use those characteristics to build novel new products.
let me ask you a question. Let me hear everybody first. I mean, considering that we didn't have an opening statement from each one of you, quick reply. Do you believe that sooner or later we're gonna come to a point that we will have cryptocurrencies being the means to have remittances that we have today, the wire transfer or the Visa? Do you think they will replace Visa, they will replace SWIFT? And do you really feel that 5 or 10 years from now we're gonna be there?
I think yes. I think the regulatory risk right now is contributing to the non-existence of a blockchain financial ecosystem that is healthy. or maybe the lack of reputable decentralized autonomous organization is also lacking right now, and that's not helping. But eventually, this will happen, and once this happens, I think then most probably the answer is yes. This.
I have one. Maybe to also kind of add on what John also just said. Myself, coming from actually one of the cryptocurrency exchanges, the major ones in Korea, I think a lot of this mess was actually caused by guys like us. I bluntly said, I think a lot of exchanges basically messed up. A lot of exchanges still are messing things up. Just over the past few days or past few weeks, months, you saw Bitcoin prices, for example, skyrocket 2-3-fold. Nobody has any idea why. People are trying to put reasons on it, but the only real news that you actually hear are exchanges such as Bitfinex hiding, stealing money from somewhere. You're actually hearing things such as eBay reportedly, initially saying that they're going to, people rumored, they were saying that eBay is going to be accepting cryptos. Just yesterday, they said that it's not true. That's the only true news that we're actually hearing still right now. But that said, that's why in the near term still, I agree completely with John that we're not going to be able to see cryptocurrency being used in countries like US or Korea. There's no reason to do so, right? Anybody who came into Korea a few days ago, probably I don't think that a lot of you have been using cash. Probably you've been using credit cards, and it works really well, right? In countries like these, it's not going to work anytime soon. But what I myself, running the research team in CoinOne and a cryptocurrency exchange, is actually very excited about are the opportunities that we actually see and find in less developed countries, emerging markets, especially those that have a very weak fiat at the current stage. Countries such as not just Venezuela, but you see Brazil, you see Russia, India, and you see countries like Turkey. I mean, these countries are very sizable. In terms of GDP, if you sum up just a few of them, you actually get trillions of dollars. So it's those economies that we think that cryptocurrencies such as Bitcoin can actually have a chance. It's not just theoretical. You can Google it up. You can do a search, Russia, Bitcoin, India, Bitcoin, Argentina, Bitcoin. You do that, and you can actually find use cases that are happening in countries like that. So those are the countries that we're actually very much interested in, and that's kind of where I myself, as somebody who's following crypto at an exchange, is very interested in looking at.
Okay, so I would like, you raised a lot of interesting things. I would like for a second to have Grigore give also his view, and then I want to go back, provided I remember, and then.
So, first of all, I don't think I'm qualified to have a view on this. I actually believe that yes, cryptocurrencies can replace credit cards, and why not? What stops them from doing it? I think, and again, I'm not an expert in banking. You are, but I think the big banks have to get into the game, right? Once they get into the game, then I think things will change pretty radically. Right? Once they have their coins, and they are starting doing it, right? I think then they have the financial power to move things. But if it's just a few people here and there, I'm not sure we'll see the big movements.
I was talking to JP Morgan 2 or 3 weeks ago, and because Love heard about the JP coin, and their essentially existence of the JP coin is only to help them do internal settlements between their clients, because those guys have like more than I don't remember the number that he gave me, more than $1 trillion of daily kind of exchanges. But don't raise a lot of points, and we're deviating a little bit from the questions, but that's fine. You said credit cards work very well. There's 2 issues. First of all, credit cards, they keep 2 or 3%. And this 2-3% comes out of my pocket. It doesn't come from the bank's pocket. I never felt any bank doing me favors, to be honest, right? So when I go buy the coffee like $5, I should be paying $4.95, whatever the 3% is. No, because essentially this is money that comes out of my pocket. That's number one. Number two, and actually you brought up Korea, and I learned that very recently. I was talking to, I don't remember who I was talking, but I learned about the history. This happened in the introduction of credit cards in Korea happened in the 70s and 80s or something like that, which is the exact opposite of Japan, actually. Because in Japan, like up to 10 years ago, you were not able to use credit cards, like in most, especially being a foreigner, right? But this moves towards the idea of digitizing money, but having, and that's the whole point we're trying to nail, having money that's been controlled. And why the government wants to, why they phase out paper money these days. John, what do they want? I mean, most likely, you'll be, why governments want to phase completely any kind of paper money? And credit card is one of them, because they want to introduce what? Negative interest rates, which is double taxation, which is what happened in Japan following the recession. Therefore, I can see that you're talking about the markets in Argentina, but how do you people feel when the government, which is one of the questions that we have, is controlling your money? And unlike Japan, you cannot take your yen and put it under your pillow anymore, but they tax you twice through negative interest rates, so they control all these outflows of money that they had.
Well, not to go down that rabbit hole too much, but going back to your previous question, which was about remittance, because that's, remittance is a clear case of what economists, those dismal scientists, call a poor tax. That we see in a lot of financial transactions in developing countries. There are very large fees paid on these small transactions. And this is actually the opportunity of, not just blockchain, but every type of fintech product, is you have the opportunity to significantly reduce the risk of either party in a transaction, which allows you to reduce the fees. To be fair to all of the parties, right? The large fees, were originally justified as being risk-taking, right? Credit cards charge that 2 or 3%, and they charge you that 15 to 20% on an ongoing balance, and blah, blah, blah. All of that is partly to offset their own cost when there's theft and stolen card numbers, all of that. Securities and losses due to insecurity have been a big issue there. Blockchain fintech products allow you to have a higher level of confidence and to reduce those attacks, which allows all of the transacting parties to reduce the fees. This is all good. Cross-border for remittance is a particular case where there are an overseas foreign worker who sends money home is often, it's nearly financial rape, the type of fees that they pay compared to the actual cost of transactions. So this is a case where cryptocurrencies that don't know borders clearly could apply very well. The barriers are regulatory and business. It's the traditional banks, traditional financial institutions are staying well away in general, well away from any type of blockchain or cryptocurrency. Yeah, some of these central banks are testing the waters, trying various things. But if you're a company, as soon as you say that you're involved in blockchain, in most countries, every bank will say, sorry, we won't even open a bank account for you.
Well, by the way, adding to what John says right now, the Ethereum Foundation started in Switzerland because back in 2013, they were not even able to open a Canadian bank account, right?
Today, if you create a company in Hong Kong, and if you in any part of the documentation say that you are a blockchain company, no significant bank in Hong Kong will talk to you. They'll just say, blockchain, sorry, go away. It's almost as bad as being an American in Hong Kong.
So I would like to ask you, and Grigore, you guys have bank accounts or runtime verification, right? Yeah. But you don't say to the bank that you're doing blockchain.
They didn't ask.
They didn't ask, okay.
So that's the thing. You have to not lie to them, but you shouldn't, as soon as you volunteer that information, there's a set of keywords that will cause an automatic block.
You became the drug dealer automatically, pretty much, or the hitman.
And you know, we hear about these jurisdictions that are opening up the regulation, right? Malta has been a big example there. Malta is really great for crypto, right? They changed all their laws. Everybody can do all this really cool stuff in Malta, except absolutely nobody can get a bank account in Malta because ECB told the banks in Malta that if you touch anything blockchain, we're going to block you from the EU access. Wow. All these guys who went and got licenses in Malta can't do any fiat operations there.
So Don, and then I want to go to some technical questions and go to Raouf and Grigore. You raised another issue. You said that, which is very legitimate, and which John actually complemented with what he said. There's a lot of like open markets. Argentina, you say India, although India does have electronic payment systems. It's T something. Like Africa has M-Pesa, which is like particularly actually active. And in Africa, actually, you can trade your phone minutes for money. That we cannot do that in Korea or America or Canada.
Well, but don't forget, you're also paying a 20% penalty if you want to ever go back to fiat there. You're trading the money that you have in M-Pesa is not real money. It is a service obligation from the telco, which you can trade back and forth. But as soon as you try and convert that back out to cash, you have to pay.
They slash you, yeah.
Oh, it's a 18 to 20% cost.
Because they want you.
It's the cost of money laundering, right?
No, it's actually not. It's similar to the cost of money laundering.
Yes.
But in this case, it's actually when you buy a $1 credit for your minutes, and the prepaid load, it's called in some places. Everybody in the supply chain of selling that to you has to have their margin. So the telco actually issues that credit at wholesale at 80 cents, and then it goes through distributor layers, retail layers, and it gets sold to the customer for $1, right? The retailer takes his 10 cents, the wholesale distributor takes his 10 cents, and the telco gets 80 cents. So, you know, you have $1 and it's shown as $1, but as soon as you want to take that out and convert it into cash, none of those players will convert that to cash for you. It's not that wholesaler. It's not that retailer, and it's sure not the telco, because the telco only got 80 cents for that $1. And you know, this is just the nature of that supply chain, and what they're selling is a service obligation. They're not doing a banking function. And the telcos are very strictly not allowed to do any type of stored value. You know, they're in most countries, right? The telco is regulated by the telecoms ministry, which is very separate from the finance ministry, which gives out banking licenses, and they're the only ones who can give you a license to do stored value services. Most telcos cannot do stored value services. It is a service obligation that you're buying. Critically important difference just in terms of the economics of it. So it's also why these types of things will never be cross-border, right? A telco is always fundamentally restricted inside that telco. They're never going to do exchanges with each other unless they have some type of intermediary system like a cryptocurrency.
M-Pesa is working in more than one country in Africa, right? Actually, M-Pesa is working in Albania, I heard these days. It's moving to Europe.
There are domestic services for M-Pesa, but it doesn't cross border for the most part. Where it does cross borders, it's because of a very strong tie-up between two telcos. In some cases in Africa, they're actually the same owner.
Very often it's the same telco owner. Yes, sir.
So going back, rewinding a little bit to what Dan said about these emerging markets like Argentina, Brazil, and whatsoever, do you guys think that if we come to a point that there's some sort of wide adoption of those countries, then their local currencies that they already suffer traditionally from hyperinflation, manipulation, control by the government, then do you think the Argentinian, with all respect to Argentina, is going to say, I prefer to have a Bitcoin that hold my own Argentinian currency, right? And do you think that this poses a big, big trouble for the government and therefore they don't want to regulate it?
So, I mean, I would go so far now as to say that that's such a macro issue that it really doesn't matter for this cryptocurrency world now. We like to dream about that, but frankly, the scale of where we are compared to those national issues, it's still way down in the noise. You know, we hear about all of the interest in cryptocurrency in Venezuela, but in fact, it's still a tiny part of the economy there.
Which brings me to my next question that I would like to hear. Okay, let's be honest. With the exclusion of John, which most likely has done it, who has used Bitcoin or Ethereum to buy something?
Not me.
So yeah, we play around with it a little bit, at least within our firm. At least, for example, within our research center at CoinOne, if you want to have a cup of coffee, I take either 500 Korean won or 1 Ripple. Things like that. So I mean, that's why I'm saying.
Within your company, but if I go out now.
Well, you're sure as hell not going to do it with Bitcoin with a transaction on the blockchain because, right, a Bitcoin transaction today cost about 165 kilowatt hours of power. That's the compute power needed to generate one block, right? The estimated global compute power needed. 165 kilowatts is somewhere between $12 and $15 worth of power that people are spending. So that is the absolute floor of the cost of a transaction on the Bitcoin blockchain. Is that to generate a block will cost you $15 minimum. So if you're going to do a transaction, somehow that's got to be paid for. You're not going to do you're not going to buy a $5 cup of coffee if it costs you, $10, $15, $20 in the transaction fee. So the average Bitcoin transaction today is over $50,000.
So that's why, yeah, I mean, the reason.
I will do the following. When you talk a lot about going to the other slide that has.
The questions?
No, that has the 4 pictures of yourself.
So what I'm trying to say here is I'm trying to expand on a few examples that we actually see in real life. So I started off with just basically people who are more enthusiastic about cryptos, working in a crypto exchange, at least trying to see whether if this works amongst ourselves. And we're basically trying to have people think within our firm that this thing actually might work. Then other examples, are you can actually see Bitcoin itself working very well. What I mean by that, especially in terms of remittance, you see, if you install an app called, for example, CoinOne, in Korea, it's a very popular It's a very popular small news flash kind of application that gives you tons of cryptocurrency news. You can see that people, it keeps on giving you news alerts about people transferring $10 million, $100 million, $5 million using ETH, Bitcoin, to somewhere. You actually see that. And if you actually look at the block that actually did it, you're doing it for 50 cents. You're doing it for $2. Then another example, while not actually using Bitcoin or cryptocurrency itself, but using blockchain technology very much, is a business that CoinOne runs called Cross. So CoinOne, we have a subsidiary called CoinOne Transfer that's actually a regulated licensed remittance business in Korea. We're actually using Xcurrent, the Ripple's remittance solution, blockchain solution, to actually have people use the blockchain, at least to try, and it basically allows people to transfer their money, remit their money, send their money through to different countries at less than 1/10 of the cost that they used to do using SWIFT.
But you still did not answer the question that, that's fine. We still did not answer the questions like, what's the, so definitely we agree that remittances is a particularly applicable area when it comes to this technology. But when it comes to me going buying a sandwich or going buying my coffee, and here is a very legitimate issue over here, just to give to people here the scale of the magnitude, like Bitcoin is like 7 transactions per second, Ethereum is like 20 transactions per second. Visa at peak can go to like 45,000 transactions per second. And then add MasterCard, add American Express or all the other guys, we're talking 150,000 transactions per second, right? This is like orders of magnitude different. And because we have two technical people over here that they're about to sleep, and we need to wake them up. And let me go to a question about the proof of work, if this is sustainable, or do we plan to melt the planet down? Because if we are to go from 20 transactions to like 2,000 or like 20,000 transactions, then Earth is gonna melt with proof of work. That's very obvious. And I would be very interested, I don't know what Grigore can disclose because he has worked as part of runtime verification, if proof of stake is sustainable and if it makes sense, and if it is a model that provides freedom, or simply we give control to the big capital again, which is what we're trying to avoid. So can proof of work scale? Do off-chain solutions like state channels, Raiden, Lightning Network, and all that kind of stuff, do they make sense? Do they add up? Because they're still not there yet. Or we need to move to something proof of stake, and proof of stake, is it a democratic, is it a safe system, or simply we give control again to the capital? So I would like Raouf and...
Well, so I'm really into the blockchain for the technology, and I'm specifically interested in formal, rigorous modeling and proving things correct. So I don't know how to answer your question whether proof of stake will be indeed successful or we just pass control to the richer.
But you work with companies that do proof of stake.
Yeah. But what we do, we formalize it mathematically and we prove the safety, liveness properties, and those make full mathematical sense. That's something I can say with certainty. There are different assumptions under which the proof of stake algorithms do what they claim to do than the proof of work. And under those assumptions, you can literally prove the theorems. And sometimes I even ask myself whether these proofs really are as useful as as we believe they are, because sometimes. In some sense, you can think of these proofs as identifying the weak points of the entire protocol, which become the assumptions now. Because as part of the proof, you have to come up with the exact assumptions under which the claimed property holds. And now suppose that you identify 7 assumptions under which the protocol is correct. now you know where to attack, right? You attack the assumptions. You don't worry about the entire algorithm. You only worry about the assumptions.
So,
But
if you don't mind to give us like a technical for the assumptions, how those, can I name the projects that you worked or they're confidential?
I think we can name some of them.
We're in Korea, nobody's gonna sue us.
Well, but it's all
Yet.
recorded, right?
And not me especially. So Cardano and Algorand, right? He's been working with both of those protocols. So what are the assumptions, like in layman's term, like we don't have infinite time, what are the assumptions,
for
what are the
example-
fears, and how these protocols work? And, you know, you're an educated, intelligent man. I mean, do you think that, do they give control to the capital or they work in some kind of like, proof of work is
So there
very
are-
democratic, right? Somebody can say.
There are assumptions like there should be 2/3 of the validators, they should be honest, right? So under that assumption, then you can prove the desired properties. But the 2/3 is very important, right? If there are only 51% of the validators honest, then that's not sufficient. There's a price to pay, right? So the threshold is higher now.
2/3 of the people or 2/3 of the money involved? Because 2/3 of the people, like the heads, 2/3 of those guys, or 2/3 of the accumulated money of those guys?
Right. So it depends on how you set things up. I mean, if you have the money, you can also have the accounts, right? If it's permissionless, but 2/3 of the players. But there are also variants of the algorithms where you also take the weights into account. So each player has a certain weight, and then the weight of the honest players must be 2/3 of the total weight.
So formally, it's two-thirds of the weighted validators
Right.
must be
Right.
honest.
Right. Right.
However that weighting's done, yeah.
Yes, yes. So when you formalize mathematically, you try to be as abstract as possible. You know, to be honest, I do not really think that much of the economic implications. I'm just trying to make sure that I formalize the right thing, and that we prove the right properties.
But that's also, you need 2/3 to be honest to reach consensus.
Yes.
A spike of dishonesty is detectable by all observers. That's
Right.
part
And
of
they-
the attraction.
Yeah. And you can safely actually ignore them.
Right.
Then you can achieve consensus in spite of of whatever they want to do.
As long as you can exclude the dishonest ones.
Right.
Yeah.
But this is an assumption of the protocol. You have to have this assumption now that 2/3 must be honest. And there are other similar assumptions. Not necessarily similar, but there are other assumptions, like even naive assumptions that are obvious for normal people, but you have to assume them, that if you send a message, you receive it, or things like that. But all those are needed. And that's actually part of the beauty of formalizing and verifying such complex protocols, that you identify the assumptions. I think most of our customers find this particular aspect, identifying the exact assumptions under which their claims hold, I think that they consider that this is the main value of this service that we offer them.
And this has been a weakness of these basically amateur designed and implemented blockchains, is that they have not approached it at the beginning from this very formal definition of the assumptions, and then used that as the basis for implementation. Right now the industry is way ahead of academia, and so that's why I love a forum like this, because we're kind of starting to catch up. The issues like this, very clearly identifying the assumptions made, is actually a review process necessary in pretty much every chain except Bitcoin. That was the only one that was done properly that I can see. From the beginning, they actually did go through and rigorously define their assumptions. No chain since has done that. And so this effort of, defining that, which is a necessary prerequisite of formal code verification, is a lovely effort.
Yes, that, and I would say also peer reviewing. People should publish these algorithms and get reviews from experts in their field, as opposed to just write a white paper making some claims and then
That's way too
moving on.
much religion right now, based on messiahs.
That's a good analogy. Raouf, do you want to?
I think to your question about the volume of transaction or the lack of throughput in at least public blockchains, I think layer 2 solutions and off-chain transactions and payment channels is a good solution. Actually, I think it's a good thing that not all the transactions need necessarily are online or on-chain, have to be on-chain transactions. There is a minority of apps that need that, and for that, I think it's possible that, and I believe with incremental improvements to the current blockchains, I think we can reach a throughput of few thousand transactions, and that will be enough for these. And for everything else, I think off-chain transactions and layer 2 solutions are a good way to go. I think the advantage is that keep the blockchain, at least the semantics of blockchain, simple, which is actually one of the good things about public blockchains is that the semantics are quite simple, and I don't think it's a good way to try to complicate the semantics using mechanisms such as sharding or whatever, zero knowledge proofs or whatever other mechanisms that will make things unnecessarily complicated in terms of semantics. With respect to the proof of stake, I think it's a fairer solution compared to others, including proof of work, at least from an environmental point of view. I don't see a problem with the issue you mentioned of getting like those that have the money or stakeholders control the blockchain, as long as they maintain a fractional ownership that is generated, for example, from fees as opposed to inflation. I think that's fine.
So 10 years from now, Joe Lubin, yesterday I think at Consensus, gave the talk for Ethereum, and he called it ethereal actually, and he gave the ethereal talk of 2042. So he spoke like it was not 2019, it was 2042, and it was a very pompous, very futuristic talk about what has happened in the last 30 years, 25 years. And he envisioned, he spoke about the economy being an economy of different coins and freed by the central banks. It was one of those beautiful, it was a very well-written talk. Now, if this is gonna be as prophetic as 2001 Space Odyssey, we don't know yet, but 2042 is not that far away either. Do you envision by 2042 having multiple coins? Do you envision Hayek stream coming through, having the SK coin, the Samsung coin? Actually, Samsung, I don't know if I can disclose, it was about to be here, and that they released this PR. Who heard about the Samsung coin PR? Nobody? So it was kind of funny because like Samsung was about to be here, and then I say, hey, I read about the Samsung coin, it came to my feed, and then next day the guys disappeared. Like the management came and said, don't speak nothing about it anymore because of the government. And and obviously they're not here. But do you think like 10, 15 years from now, we're gonna have those real alternative coins that the Amazon coin is backed by Amazon, but the assets of Amazon, the IBM coin the same, the Facebook coin the same, but the advertisement potential. Do you think that we will have that? And how do you feel these may come out to be and we reach that point?
So I think very much yes. I think it will be a world of tens of thousands of coins, and that, right, say a company specific coin, that company will pretty much have to be the market maker of last resort or the central bank for that coin. Now, the issue will be that for me as a user, I must not need to know anything about any of those 10,000 coins. For me as a user, I need to know my own preferred currency, maybe one or two of them. And that when I want to do a transaction that involves the Facebook coin or the JP Morgan coin, it gets automatically converted somehow by some middleman. I don't know, I don't care. I'm, you know, that seller, service provider, recipient, he gets the coin he wants to get. Me as the buyer, I have my currencies and I pay with the currencies I know and I care about. And the exchange rates as this becomes mature will largely stabilize, but I will be presented, you know, to approve a payment with an amount in my own preferred currency. We cannot, you know, in that world of, you know, something more than 10 coins, no user can be expected to know or understand what the exchange rates or expected rates are or volatility of that coin is. No. He has his one or two preferred currencies and he can, you know, pay in that currency and see how much it is in his currency. And that's it. And I think that world will develop. You know, we kind of have that world today, right? You've got the dollar, and you know, if I'm in Cambodia, I know what the cost is in either Cambodian real or U.S. dollars. If I'm in, you know, Singapore, I know it in Sing dollars or U.S. dollars. If I'm in Hong Kong, I know it in Hong Kong dollars or RMB.
With the Forex market in general. I thought we had a little bit more time, but at this point, we don't have a lot of time, so I would like to open the panel to the audience to go through questions by the audience, please. Okay, we gotta get a little bit more time, which means your closing statement is gotta be a little bit less. After all, the general chair.
Hi, so my question is, since Friedrich Hayek talk about the denationalization of money, not the currency, so my question is whether there's a possibility of crypto version of money, or the what is the future utility possibility of having a cryptocurrency as a store of value, or it's kind of safe haven for things like that. So I'd like to hear about your view about these possibilities.
So your question is if cryptocurrencies can become a store of value, just like the way that we see gold, for instance, or real estate.
Yes. And so one of the way for utility of cryptocurrency is that things like some economic collapse, they can change their wealth into cryptocurrency, and they can survive in those kind of collapse. So maybe this one of the main utility for many of the major cryptocurrency nowadays. So in the future, so we're gonna have a real money. They have to have a backup asset, like a gold or anything like
Who
things
wants
like that.
to get this question? Hopefully, without the first name, John.
Okay, I'll try to give you my opinion. So one thing I think that's already been confirmed is that the store of value part, I think, is going to work out very much well. It will. I think it will, and it already is at the moment. But at the same time, the only way that you can actually have it work as a store of value is if it actually is possible to change it to some sort of fiat or also some sort of other asset, right? But assuming that is going to be possible, at least with the as long as, for example, exchanges like ourselves still exist, one of the reasons that I think it's actually going to be a very strong store of value is because if you think about it, things such as Bitcoin is actually a great example because it's actually, there's only a fixed number of coins that's ever going to be issued, right? And it's widely spread already. If you think about it, it's actually the first financial asset or something quasi-financial asset, liquid enough, that actually has a limit in supply. It's actually the first time that humans have seen it, if you think about it. What I mean by that is people think about gold or oil and say that there's a limited supply of that. But if you actually pull out the chart of global capacity and supply of things such as oil, diamonds, or gold, you have never seen the remaining amount of oil go down. So nothing has been deflationary in this world since modern economy, right? So in that sense, I think at least in terms of store of value, as long as there is some way that you can actually exchange it to different assets such as fiat currencies, I think that part has already been proven. And I myself am a strong believer, at least in that part, and think it's already done.
Well, and that's the key word. It's belief, which is the fundamental issue for any type of currency, including all fiat currencies. They are all based on belief, on some trust. The particular cases you were talking about, so a safe haven for capital flight, that is always problematic, right? If you have a situation of a runaway inflation in a currency, you know, basically those who moved out of the currency and into physical assets before the runaway survive, those who didn't get screwed. And as Dan said, it's all about the liquidity, the ability to convert from one to the other, and that just largely does not exist for most of these currencies. Even, you know, Bitcoin in most of the world, the only way to do real conversion of the digital asset to cash is an OTC transaction, human to human. And I see, you know, in Southeast Asia, I have used Bitcoin a fair bit, but, you know, my corresponding party always ends up having to find a guy who can give him cash for the coin because the exchanges are not legal there.
Let's take more questions. There were more hands.
So before my question, one remark to that. Dan said in the beginning that nothing was happened that explained why Bitcoin is rising, but something happened. Trump intensified the trade war and people were expecting stocks to go down. So what happens? Probably they bought Bitcoin. So I would guess they're already using it to store value. But my original question is, why should a company like Samsung, if they want to issue a coin, do it based on a blockchain when in the end they are nothing more than a central bank issuing a private currency. So as they are in control of everything, it doesn't make any sense to use blockchain technology if they can control it in the end and manipulate it the way they want to do it.
So your question is, if I hear you correctly, Samsung or Facebook or whatever, they should use a permission chain.
Why do they should use a chain at all? They can just use a good old data bank, store which account has which money, and then just give the people the money they want, book the money like they want, like a central bank does it today.
It boils down to what John said, and that's why we have John here, immutability and transparency. If it is a central database, you go write it off.
Yeah, but they can make the database open. I can read the database all the time and can look what's going on. What do I need the blockchain for? And what you argued that they can correct if something is going wrong is just changing something in the database.
I mean, the cynical answer, which is the cynical answer, which is actually how these decisions get made in companies like that, is it's just a marketing ploy. And that's what's really going on. Is anybody stepping back and looking at, oh, what are the technical features and functionalities that we need to do this, and will the market? No, it's just marketing. It's the hot buzzword today, so that's what we're going to do. And in fact, we don't really care if there's an actual blockchain there or not. We'll call it that, whether it is or not.
No, I was just going to agree, and but
So the answer is we don't need the blockchain.
not in that particular case. Yes.
Right.
I disagree with that, but I'm not
I
a
mean,
panelist.
you need it if you want to have a real decentralized currency like
Yeah,
Bitcoin. If you want to get
I
rid
disagree.
of central things like now the central bank or later on central control by companies.
Over here, you can.
As any cryptocurrency becomes increasingly accepted, the potential benefits of fraud become increasingly valuable, right? If all the saffron and truffle merchants accept Bitcoin, then a double spend attack becomes more valuable because I can buy my one Bitcoin and spend 1 million times to buy a million different saffron and truffles and run away with a fortune. So given that the value of fraud goes up, it's possible to buy the resources to take over almost any decentralized chain for enough money. I can buy all the mining hardware, or I can buy all the stake. If any cryptocurrency becomes valuable enough or becomes accepted enough, we fundamentally have to trust some organization to be very hard to corrupt or very expensive to corrupt. And in the traditional government sense, that's not always been true. Liberian mint officials a couple of years ago ran off with $100 billion in extra printed cash. But historically, we've trusted governments to do that more than we've trusted random mining people located in mostly, I guess, China now. So how do you think that will look in the future? Who will we trust?
If we were to put the question in one line, you mean, should we trust miners or should we trust the central governments?
As currency becomes more expensive,
Cryptocurrency or currency?
as cryptocurrency becomes more accepted, enough corrupting power will be able to, will have an incentive to attack it. How do we build something that's hard to corrupt?
I think, for example, you mentioned the miners or the stakeholders. As long as they have a fractional ownership of the value generated by the system, it's in their own interest that.
Not if they can make enough money or enough value in
and
a
then
fraud
disappear. So they don't necessarily need the sustainable system. That's what he's saying.
Also, I think that another thing might be as the system gets more popular, especially with a proof of work system, a proof of stake system, the actual cost of buying up stake will also increase as the value of the system increases. It's like right now you can go buy half the shares of Visa and shut it down, but no one's going to do that.
Also, maybe we don't have yet that protocol. We are still working on it, right? That's why we are here. That's why we publish several, not we, but as a community, several consensus algorithms per conference, right? So we are still searching for the best solution. If we had the answer, then we all do the same thing. We are still exploring.
So going back to this argument, although I'm not a panelist, and that's the beauty of the crypto economics and crypto system. I bought a new Lamborghini and I want to go drive it 300 miles. And I don't care, and I have enough money, even if I kill people to do, to get out of jail, but I don't do it. Why I don't do it? Because if I drive my car like that, the guy that has the Honda or has the BMW is gonna drive like that, and one time I'm walking and they're gonna run over me, and I cannot buy my life back. So it's not that I don't drive very fast because I don't care to kill others. It's because I don't want to kill myself, somebody else. So it's the same argument that essentially it was said, that Raouf said, that essentially if people have stake in the system, they want to have, and that's how society evolved in the last.
Nah, but I think it is stunningly naive to think that people value reputation that highly.
Stake is a reward. What
Yeah.
you just described is a punishment incentive.
Yes.
And cryptocurrencies, unlike governments, are not very good at punishing people. Or do we want a cryptocurrency backed by an
Well,
army?
I guess if someone actually owns a bunch of stake and the value of that stake goes to zero, that is a punishment.
Right, but
You
again,
can't
I'm-
punish people beyond the amount of stake they hold. That is true. You can't go there and shoot the person. But yeah.
But again, I'm asking what happens when fraud becomes more valuable than the
You-
stake.
Well,
you
yeah,
hold.
but
You are exactly right. For roughly $4 to $5 billion of capital, I could deploy the resources to entirely corrupt the Bitcoin blockchain. That's a cost that's well within the feasible range of many governments. Now, could I keep it secret? Probably not. Right? But could I corrupt it and dictate the direction of the chain? Yes, I could do that. And most of these chains, sufficiently large economic power can at least corrupt them. It's not clear that you can control them.
You don't have to control them for long. Currently, we're held back by the lack of acceptance. You couldn't buy enough Lamborghinis simultaneously to make those $4 or $5 billion.
You could buy
worth
lots
it.
of US dollars at exchanges, so you can already do that.
I'm sorry, could you say again?
You could buy lots of US dollars at exchanges by double spending. So I think this incentive is already there. You don't need
Not that
sellers of.
many.
No, I don't think the liquidity actually exists at the exchanges to be able to do that. So in that sense, right now, current today's situation, there is nowhere near that level of liquidity that you could sell those coins, get fiat currency to make such an attack worthwhile.
But then still, I don't.
But it can happen.
Yeah, but then I still don't think that. Let's say if your objective is profit, like economic profit. So let's leave politics out of this. So if you buy up, especially in proof of stake system, if you buy up with 2/3 of the stake, you control the system, and then before the price of your token drops, you try to sell everything. First of all, that's really hard because proof of stake generally requires you to lock up your capital. So it's very unlikely to. I can't really think of a scenario where you can actually monetarily profit more than the money you threw into attacking the system.
So actually, we saw something like this. Something
Yeah,
like
but the-
happened with the DAO. And what happened is
Yeah.
it led to a fork because people came together and thought something were going wrong. And the same thing would happen if you would run
Yeah,
such
and-
an attack on Bitcoin or something like that. People, because in the end, it's people. And people will come together and be rational. And you have to trust the people who are supporting the system, whether they want to kick someone out or not, or make it unhappen.
Also, I feel like another important thing is that, of course, we cannot neglect non-monetary incentives. Let's say if my government just can't survive with this coin, like being what is, let's say it's used for widespread capital flight that is going to totally crash my fiat currency, then in that case, maybe such attacks will happen, but not for I'm going to buy a bunch of Lamborghinis. Yeah.
You had a question before?
Oh yeah,
But-
I do have a question.
But-
So
but
go ahead.
Just to finish this
Yeah.
one up, though, I would like to point out the threat of nefarious activity is always there. I mean, don't forget, we had a relatively low-cost attack on the Central Bank of Bangladesh that, could have netted the thief $1 billion, but because of some typo errors, they only got 81 million. And they got away with that free and clear. Absolute total theft through the SWIFT system. And in that system, because the liquidity was there, it was gone within a day. Now, we've had a number of thefts like that on blockchains as well. And when you have a completely trustless system, it's also fundamentally no recourse. I mean, the DAO, the only recourse was, let's violate every principle we have in this, back up and start from there. It was a complete violation of the fundamental principles of the blockchain.
Yeah, but still it happened.
Right. And yet it happened because we're human.
I have a question. So, do you think that permissioned blockchains that, for example, supported by governments especially, do you think that they will become sort of a threat to permissionless blockchains that are borderless?
Grigore, Raouf, lead comments.
Okay. I think that will be, they are dangerous. I do think they're definitely dangerous because they will give government unprecedented control on the economy, and they like to regulate money as well as information and whatnot. And I think that's basically a threat that certainly, hopefully, won't happen.
I think the two, private blockchains run by governments and public blockchains are probably going to coexist in my view. The applications are completely different. For example, private blockchains, especially run by governments, I think it's something that's absolutely necessary. One example, I think a great one, is actually things such as identity, right? We're living in the 21st century. We're living in the so-called digital era. But when we go to school, we need a student ID card. When we go to the airport, you're messed up if you don't have a passport. If you want to drive, you need a driver's license. And my wallet right now, it doesn't have any cash, but it has like 4 or 5 different ID cards. It doesn't make any sense, right? But this whole identification system, it actually goes back about 600 years when King Henry of England made the first passport. And we've basically been using the same identification system for 600, 700 years now, right? But if you think about applications, what blockchain can bring, for example, if you have every other government, let's say in the OECD or UN, all operate like one node, then basically you can have a completely international identification system, and you can basically just turn on whatever ID you want to use, just using your phone or whatever piece of hardware that you have with you. Right? Things like that, not related to a cryptocurrency, but in terms of blockchain, there's great applications that private blockchains, especially the governments, can run, right?
Why would you need a private blockchain? Can't the government simply run a PKI to sign certificates for your ID?
Yeah, it doesn't matter. I mean, what I mean right now is that will the governments actually go that way, right? Will the governments do that? I mean, at the end of the day, maybe all we're ever going to need is the Bitcoin or the Ethereum or the EOS blockchain. But right now, how is it going to really happen, right? Because people with power, they're not going to let it go that easy. And one of the reasons that I initially said that we're much more interested in CoinOne looking at emerging markets and weaker governments is because, for example, you're never going to see Bitcoin become something that replaces the US dollar in the US. Before that happens, the army is probably going to come and kill you. Right? I mean, what I mean by that is cash.
Kill who?
it's-
Where?
See,
I mean, it's
please-
easy to
no.
it's easy to attack Iraq, but
See, it's like if you go down really fundamentally when you come to fiat, there's only two uses for fiat. One is to pay tax, and one is everything else. It's everything else. The only reason that you want US dollar at the end of the day, the only reason that you want Korean won at the end of the day, is that even if you have very bad even if you're like an anarchist, right?
We should be careful when you say US dollar because 70%, 60-something% of the world's reserve is the US dollar.
Yeah,
Good or for bad?
what it always connects to because somebody wants the US dollar.
I grew up in Greece in the 70s, and I remember my parents, because we just came out of the dictatorship, we were buying US dollars in the black market because you didn't know if the drachma would be the same value
Yeah.
tomorrow morning. So it was like a little bit like gold, basically, if you think about it.
See, I mean, I probably have way too much to say about this discussion, but maybe just to not take too much time. What I mean by that is, I mean, cryptocurrencies, that's why we're much more interested in emerging markets, where countries that have very weaker fiats, because their countries, the people there are the ones that probably are going to be the ones that prefer something like Bitcoin or Ethereum or the US dollar instead of what they have already, right? So that's why, again, private and public blockchains, at least for the next 5-10 years, it's going to be something I think completely different and something that's going to coexist for a different use.
So I guess that was the last question, or is there anything we need to...
I want to give an answer to that.
And we have one last...
Uh,
You made a mistake.
Actually, you have more time.
we have plenty of time.
You have 23 minutes,
Right.
Okay.
25 minutes.
So
Sorry.
I think the answer that these will coexist is absolutely correct. I think governments will build private blockchains. I think that my view externally...
But the question, forgive me for playing devil advocate.
Yeah.
The gentleman asked a very legitimate question.
Right.
Why
blockchain.
a damn private blockchain and not a database that we already have?
Well, so that was gonna
So what-
that
that's
you
one thing that's
you
still-
short-circuited my answer. So my view externally is that private blockchain is no different than a private database. You have absolutely the same ability to subvert it, to change the data, to do anything. And so my confidence and trust in that will always be limited. It's always a suspect source. I will always have more confidence in that public blockchain, and maybe the solution is, some sort of consortium hybrid. I don't know, but the private blockchains to me are always no different than a private database.
Let's go to the gentleman.
So let me put a proposition here for discussion, that the cryptocurrencies as we see them today are solving only 10% of the problem.
So forgive me, slower. The
cryptocurrencies as we know them today are solving only 10% of the problem. Why would I say that? Because the way that people buy things today is not by having an asset like gold or even Bitcoin, which has a fixed supply. People go out and borrow money. Okay, that is, they make promises, and the purpose of the financial system is to manage the risks with relation to those promises. Okay, which means that, what are you doing when you're borrowing money? The bank creates a ledger entry that creates that money. Okay, they're supposed to have 10% backing for that, but the banks go out and issue that money, and the Reserve Bank, if it sees that too much debt has been issued, just issues the supply to enable that backing to exist. Okay, so the proposition is that to the extent that cryptocurrencies will be successful 10 or 30 years from now in replacing the financial system as it exists, the proposition is that if that happens, then it will be because the cryptocurrency ecosystem has basically replicated all the things that we see in the current financial system.
Certainly, not necessarily the same mechanism.
The technological mechanism may be completely different, but in terms of all the sort of issuance of debt and the risks and
that sensibility that there are
bubbles
lenders
and
and
whatnot
borrowers
that come
and
with
so
that,
on,
yeah,
that
yeah.
all has to develop, certainly.
But what was the question?
I was just putting that proposition out for discussion.
I think they are able to create money because they're able to create money because they have control over that, right? Because central banks and banks have control over that. So that's why they are able to create money. But then assuming that obviously if the blockchain or the cryptocurrency is not immune to inflation or printing or minting money, then the same thing will happen again as well. In the case of Bitcoin, it doesn't, because of the limited supply, then that would be difficult.
Yeah, but what I'm saying is that what they cannot control and will never control is people making each other promises.
Yeah, so I have a question a little bit about the control and also follow up on the previous question. So we have established that having a centralized blockchains kind of doesn't make sense. But maybe we can rephrase the question asking whether the governments or the central authorities which currently have control will let go of this control, because with public blockchains you can manage certain things. Like you mentioned identity systems, you can manage identity centrally and keep track of everybody and have it kind of a full control of issuance and who goes where. Or you can have a public blockchain which maintains identity, but I'm in charge of my identity. Similarly with, say, Facebook, with public blockchain, Facebook can unbundle and let work a little bit more like Steemit, right? Would that happen? Would
you're mixing concepts very dangerously here. The sense that, a government's private blockchain implies some level of privacy is just plain wrong. Blockchains, in very fundamentally are designed for transparency. Whether it's a private blockchain or a public blockchain, they're designed to transparently present their transactions and their state. And as soon as we start talking about something like identity management, it doesn't matter whether you're on a private or a public blockchain. The issue of privacy is actually an abstraction layer which is, must be considered separately from the transaction and state management that you have within a blockchain.
That's correct. That's correct. I was more interested in the sense of control. So, for example, with self-sovereign identity systems, you may imagine the ability for a newborn baby to issue itself an identity instead of the government issuing that. So my question was, will that happen? Do you imagine 30 years from now that some things which are centralized now and kind of are in the hands of the governments will be managed in a distributed fashion?
My sense is that governments will never voluntarily give up that control, that most people will not understand the value of retaining the control. As you say, for the baby to issue its own identity, there's one critical first step, which is you have to generate your own secret key and you have to keep it. As soon as you have a recovery mechanism of any sort, provided by a third party, you don't own that identity. You don't own that account. If somebody can restore that account for me, they own it, not me. And there, this is something that for people to really control their own data and their own privacy over time, we're going to have to educate people and create technical tools to make it easier to do. You know, these stupid multi-word mnemonic craps that some wallets have and so on. You know, we need better ways to do it. So what that is, who knows? But I need to have absolute control of that identity in a way that's hard for anyone to steal, that only I can recover it, and only with this key can the certain permissions be granted. Now, governments will never create such a system. They don't want to give the individuals that power. Governments will always design architectures, just like a Facebook, a Google, a whoever will always design. We have this surveillance economy where they have that control.
If you think about it, the world when it comes to privacy, the world goes to worse and worse and worse. As I said yesterday, I don't know if you were in the banquet, like in Toronto, at the lakeshore, Google has invested millions and millions of dollars, and it's a large area. It's like basically an area of like 4 or 5 blocks, and they're gonna put surveillance cameras and everything. They're gonna know what kind of trash you're throwing out, everything about you. So governments will not do that. But in my past life, I was involved in the music industry, which I left in '99. And then Casa came, and Napster came, and the first thing that they did is they sued them. And they were successful because somebody was like building Casa and Napster. And then BitTorrent came. Can I sue BitTorrent? Actually, they started suing people using BitTorrent, but it was futile. And eventually, the music industry used to be like a $40 billion industry. Today it's 15, 17, and more than half goes to Apple and Google and Spotify. And there used to be like 30, 40 record labels, and there are only 3 or 4. So eventually, the governments, no matter how much they regulate, it depends on what the people do. I would like to believe that eventually the decentralization is going to stay around.
I agree. I think public blockchain pose a threat to government control, and they won't let go easy. But it's very hard. It's very hard to control.
So if you're a libertarian technologist, you know the right approach is surreptitious subversion. You sneak this stuff in, and this is generational change. But we have to build it into the technology and get people to expect it.
And eventually, this actually, this competition will have a positive side effect in that it will improve governance, right?
There's no improvement in government. I mean, I'm not the panelist, but now I hear stuff like there's no improvement in government.
So I would totally agree that the government never ever will voluntarily give away the control. They will do everything in their power to stay in control of everything. They will outlaw technology. They will to try to suppress it. But governments also fail. And now we see, for example, in Venezuela, buying, selling with cryptocurrency is the common standard. And so maybe in countries that are even failing more, we will see those things emerging and becoming the standard once we have the technology and the people will be capable to use it. Maybe in those maybe failing countries, those technologies will grow and prosper, and we will maybe see it in reality, even though like the government in the European countries or the United States will never ever allow this to happen on their territory, but it eventually will happen in some countries, I would guess. Of course, a country always can fail.
I'm hopeful that in countries where there are a large percentage of unbanked, where they don't have credit cards, where people, you know, don't have bank accounts, and I work with some of those countries. The opportunity is there to leapfrog those old systems. You know, places like the US, developed countries, where everybody's got a credit card or 5, everybody's got a bank account or 2. The surveillance economy is really, really deeply embedded. It is corporate and governmental. The security and cryptography they use is all penetrated by the intelligence agencies, at least. You know, as is what, you know, all the blockchains use the same, you know, crappy NSA weakened elliptic curve primitives. I think that step by step in these developing countries, the opportunity is there to introduce some of the new things, but then you're doing it at the retail level, at the very low level, and over time, if we have that decentralized, immutable characteristic as shown, people will come to expect it. And that will filter up to what you were saying, which is, as people expect this in their day-to-day simple financial apps, payment apps, that will filter up to their expectations of business and government.
My biggest, yeah.
And generationally will become a force to reduce corruption.
So is it because governments in these places are weak, or is it because there are no alternative means to do the same thing, like to transact in the same way?
Well, it's not. It's the state of a country. So, you know, one country I work with is Cambodia. Okay, it's relatively small. You know, it's 15, 16 million people. Less than 2% of them have credit cards. About 5% have bank accounts. It is entirely a cash economy. Most people are paid their salary in cash. They get paid in Cambodian rial in cash, and then they go outside to the money changer and change most of that into US dollars, because that's what you use to pay for anything significant. It is very much a cash economy still. And this is true in some rather large countries. You know, if you just say those kinds of characteristics of largely cash economy, low credit card, you know, low bank rates, countries over 50 million people. So that's what? Indonesia, Philippines, Vietnam, Thailand, Turkey, Egypt, Brazil. There's 1.2 billion people to address. And are the governments weak there? There's all kinds of, you know, that's a huge spectrum of governments there. But the governments aren't going to be deploying financial apps and identity blockchains and so on in those countries. So that's why I said the opportunity is there to really do something leapfrogging. If you can make something that's useful to the general retail user, and it's all possible now where it wasn't 5 years ago, because we have viable $50 smartphones.
Gentlemen,
Yeah, I have a question here.
let's go in that.
Yeah. So I can understand as a technical people that we need the blockchain to be widely deployed, widely used tomorrow, not now. So, but what is the social effect will be on our community? What is the case if I don't trust you, but I trust this computer? How the human being will be?
So what is the question exactly? The question is
The social effect of using
But you trust already the computer. So the social effect of not having interpersonal trust by having trust based on a machine,
Yeah.
which is fine with me because the machine never lied to me.
Well, and that's, but what you're saying is the premise of a lot of the extremists in blockchain world. When they say a trustless system, the point is, I don't need to trust you in any way to do a transaction with you. And you know, and we will refine that with smart contracts that allow for, you know, the if this then that type of behavior. Yeah.
Or I don't want, I don't need to trust an intermediary to, you know, to whatever, to.
Well, and that's what we have today.
Yes.
I mean, the
transact
banks
with
in a
anybody.
lot of these institutions exist as that trusted intermediary because I don't need to know the other party.
I
It's
think
why
that
I get a
now-
letter of credit to ship coal over there.
I think now it's the same even without the blockchain. It's like I don't trust you, but we both trust the government. It's just we replace that by perhaps the blockchain. I actually have a question. So, do you think that? Okay.
We transact, but we don't trust.
So you're already trusting the computers, right? When you log in your banking account and check your balance, how do you know that the computer will not empty?
You cross the street.
Right, exactly. Yeah, when you drive your car, you already trust the computers. You trust 70 computers in your car only.
And soon you're going to trust the car altogether, right? Because it's going to be self-driving.
No, but maybe it's like I'm not a computer scientist, right? I'm a business background, and I look at these cryptocurrencies from an investment perspective. And one of actually the debates that I actually had with some of my friends and people and my colleagues who actually come from more philosophical kind of backgrounds. One of the questions that we still haven't been able to agree on an answer is, do people really want to be decentralized, right? Because human beings naturally are dependent. One of the things that you can probably ask to anybody is, all right, you're a U.S. citizen, you have a U.S. passport. Do you want to switch it with the Venezuelan one? Or do you want to switch it with the Russian one? Do you want to just get rid of it? Because, I mean, a lot of people talk about decentralization. A lot of people say that, you know, it's like governments are bad, but you love your own passport. So it's one of the philosophical questions that I myself have always been asking and haven't honestly been able to answer, because I think I still want to be protected, and I think it's just natural human beings. You know, it's like we're dependent, right? So it's that might be
Okay,
some
that is the
question.
government. How about
for
the
me.
banks? Would you say
Same
the
thing. So what I mean is, myself, I would still rather put my Korean won in KB Bank instead of like below my mattress, under my mattress, right? But this is going to be different for every other currency, every other person. But I think, I mean, it's a philosophical question that I think it's not going to be answered anytime soon because we are dependent. So.
I think that even in options, you can choose to have your savings protected by someone. So let's say you trust JP Morgan, you just hold everything in JP Morgan for. Nothing prevents you from being dependent. It's just that right now you're forced to be. I think that is the
No, I mean, I don't think anybody's forceful. Okay, so just that. Let's say right now, suddenly pull out a gun and point it at you. You're not going to fight me. You probably want to call the police because you're dependent and you can't, and nobody can actually protect themselves and nobody can actually be completely decentralized. So I'm just saying an extreme. And
I think the main difference is that you can choose who to be protected by, and you're not forced to use your territorial administration, which may fail anything. Take all your stuff.
Okay, we're getting very philosophical, which is great for me because I come from Greece, right? But for me, if I were to add, I do trust the machines. I don't trust people. I do trust the software because I know it's going to run unless Intel or AMD or Qualcomm has put like a bug into the hardware, right? That's very hard to check. And I do believe it's a much more trustful way than trusting the government, because historically, if you see in the last 20, 30, 50,000 years, since the day we were monkeys, it was always concentration of power. I prefer to have a software that is running, I know what to expect, because no, I don't trust the government. There's nothing to be trusted from the government. That's my
Thank you.
on that.
I think, your statement went in the direction my question is going to, because my question is twofold, actually. First of all, where does this perception come from that blockchains are democratic at all? So, I mean, we have just some investors who invest either in proof of stake or proof of work, and they have these hardware devices they can use, and they aggregate wealth. And this is nothing new, this is what we have had, but this is nothing superior. And now we can observe that, everything that has been promised by blockchain so far couldn't be achieved. And while it hasn't been achieved in our economy so far, we go now to emerging markets and to developing countries, and we use them as test beds. This is my perception. Could you comment on that, please?
Oh, bad person to give the mic.
Right. So the first part that, is it democratic? Yeah, no, of course, that's nonsense. It's a technology that has certain characteristics that is very much dependent on the assumptions that you make. What are those boundary conditions you create at the beginning? And it might be, it might not be. Lots, as you said, lots of unkept promises. That's a hallmark characteristic of all blockchain projects. As they make, very exaggerated promises and claims and rarely meet them. So for me, I don't much worry about it, because every 2 years there's a new darling sweetheart, new chain will come up. So, everything to me is just, well, I'll do this for a couple of years, and I'm going to move on to the new technology when that becomes available in a couple of years. So I'm going to do my stuff with as much of an abstraction layer so that I can migrate easily. As to developing countries and are we irresponsibly using them as a testing ground? I do worry about that. As I said, I'm using one particular country as a test bed, and I'm doing that in cooperation with government agencies. Hopefully the people involved in it are doing the right thing, but it comes down to human trust. And, do they trust my intentions in both the technology being deployed and the business models being deployed? That's always a dilemma, and there's a human equation there that just the people have to evaluate. But I'm particularly attracted because it is the opportunity to deploy new things with viable, workable, scalable technologies. What I'm doing there is not very much dependent on blockchain. It's a overall fintech system that has a small component of blockchain. But it is very attractive to me to do it in an environment where I don't have all of those legacy systems. That
the legacy means I would be fighting every type of institution, government, regulatory, the financial businesses, even companies. How do they collect payments? Well, if everything they're doing now is in cash, they're open to new ways to do it. If they have their existing PayPal and credit card systems, they don't want to change. They don't want to try new things. So they're actually more open to try new things without a legacy infrastructure. So it's attractive to try it. And as long as I keep my intentions good and proper, and you know, that's a very, very subjective evaluation, even when it's introspective. But also I have to convince those other parties of that on an ongoing basis. Sorry, that went on way
Okay,
too long.
so I think we're out of time and we have to go to the last segment, which is the closing comments for the conference. Let's take an opportunity and thank our panelists today for being here.